What's up, Discord? Welcome back to another market analysis. We're looking at the news calendar for this week, and it looks like the most two important days is going to be Tuesday and Friday. For me personally, the main things I'm going to be paying attention to is the job openings, ISM services for the dollar, and also NFP. As you guys know, it is a new month, so we're going to have NFP this Friday. I'm surprised it wasn't last Friday, but we did have FOMC press conference last Wednesday as well. So now we have NFP, and then in about maybe next week or the following week, we're gonna have CPI, right? These come out usually around the same times of the month. So if you haven't picked up on it yet, hopefully you start picking up on these news events, and you don't have to, stare at the calendar all day. Okay, but it's good to reference the calendar just to have an idea of what's going on for the week. So Tuesday, we're gonna be careful trading around 10 a.m. especially since that's during our trading time. Okay, that is the main thing that we want to pay attention to when it comes to these news. 8:30 a.m. does not affect us. We start trading New York Open at 9:30, but 10 a.m. is definitely going to affect us here on Tuesday. Okay, and also these areas as well, these news events that comes out, we can use those as valid liquidity points to look for our possible reversals and possible entries to take the market to the next liquidity point. So for example, we have NFP. Let's kind of show you guys. NFP will come out, and let's say we do some like this. Let's say NFP just does some crazy, trying to create a wick candle for you guys. Let's say, boom, market's moving, and NFP does this. Boom, boom, right? Boom. This is the high NFP. This is the low of NFP. What we can do, boom, we'll look for shorts at the highs. This is a high liquidity point, high probably liquidity point. It's on the same level as previous day lows, daily lows, and all those. So we'll look for a possible reversal here. And the reason why we can look for a reversal here is because we have the low of NFP, right? And we can take the market down to the low. And once the market takes both liquidity points, then it'll continue the trend of where it wants to go. All right, but it has to be the actual NFP candle. So when you're doing this, go on the 1 minute candle and look at the exact time of 8:30. Okay, that candle comes out, and you want to mark out the high of that 8:30 candle and the low. If that high and low is already taken, then it is not that high probably liquidity that we're looking for. Okay, so just keep that in mind. Now, since we're already here on NQ, we're going to start our market outlook here, and I'm going to go here on the daily time frame. So nothing really has changed for me on NQ. We're still bullish. You guys can see we are still respecting these gaps right here. We have this daily gap that we have respected, then it closed. We have a wick, and we're just continually pushing higher. We have another daily gap, which we might trade into right here. So I'm gonna keep that in mind, because now I want to do like a more higher time frame analysis here. We don't really have anything to the left for us to look at or reference. We're just kind of just shooting towards the upside here. We have a lot of liquidity points underneath us that I'm going to stop drawing them out as far until we see the market is actually coming lower. But this here is going to be a area that we're going to pay attention to, especially since we already have this 1 hour gap inside of this area, and we have another gap right here. So this gap is going to be the first gap that's going to be important. Reason why is, okay guys, if the market is here and we are rejecting inside this gap, that means we're still maintaining this bullish order flow from this push right here, right? So far, what do we have? We have low to the high, low right here to our high. And what do we expect? Another low to our high. Right now, this can extend all the way into here, and it would make sense for us to extend here. So if we're following our basic structure, that's all we have right now. Low to high, low to high. I'm just gonna make it a little bit cleaner so we can see it. So from this low that created this high here, where does our 50% align? It aligns literally right here, guys. And what do we have here? We have our daily gap, we have a daily gap, and we have the 50%. So what does that mean? That means that right here is a high probability area, okay? And that if the market is going to continue this structure properly, then we would want to see the market come down here, trade into this 1 hour, take out this liquidity before we potentially go higher. That is going to be the perfect buy model, the perfect scenario for us to happen, right? It'll come down, we will come back into the 50%, we'll come into discounted pricing, and we will continue higher. We also have a psychological level above us. So another thing I could see happen is the market could trade into this 1 hour, push higher, trade into this psychological level, create a distribution, and then we go down into the 50%. Why is this 50% important? The market has two reasons, well, three reasons of moving. The market is moving to rebalance inefficiencies, target liquidity, or rebalance equilibrium, right? So ask ourselves, what could be the purpose of this market moving? Are we targeting liquidity? Well, we don't have liquidity to target above us, okay? So liquidity is not on the hierarchy right now, unless we come lower, right? So even if the market wanted to target liquidity, yes, I understand we have equal highs up here. We have relative equal highs, but that's it. Underneath us, we have more liquidity. We have this 1 hour intermediate low, we have this 30-minute, and we have all these previous day lows. So if the market purpose is to target liquidity, then we would be trending lower already. So that's one purpose. Second purpose of the market is to rebalance inefficiencies. So rebalance this 1 hour here, potentially rebalance this 1 hour, or we can rebalance the daily time frame, which would still bring the market lower. Okay. The third reason the market moves is to rebalance equilibrium. What is equilibrium? This is equilibrium. So from this low to this high is our current leg. Right now, equilibrium is where? Equilibrium is right here. So you see how literally all of the reasons the market moves is lining up to this area right here, the 50%. So that's why we mentioned this area as a high probability area. Now, it doesn't mean that as soon as the market gets here, we're going to buy. No. The market could come here and we could sit here and manipulate. We could manipulate a little bit higher, but this just shows us that this is the buying point, right? 50% underneath is the buying point for us. Now, like I said, it doesn't mean that the market cannot trade from here and continue going higher. We've been seeing it happen, but it's going to be higher probability underneath, right? I want to give you guys the highest probability scenario, which is going to be down here. So that's what essentially I'm going to be expecting this week, is for us to come down and trade into this daily gap. This daily gap right here is going to be important. If this daily gap gets respected, if we trade in here, we gets respected, then we can expect the market to continue this bullish trend. If we come down here, let's say we reject and then we close this daily gap, that might set us up for us to start coming down and take out some of these liquidities and some of these lows. Okay. So just keep that in mind, guys. All right. Now, the next probability scenario that could potentially happen here is this 1 hour right here. So what we're going to have to do, we're going to have to wait for the market to open. Market opens in like 4 hours from me right now. We're gonna have to wait for the market to open. And I want to see what Asian session and London session does right here. If we disrespect this 1 hour gap overnight, then most likely this is going to be our main focus for tomorrow morning. If let's say we trade right here and we're just moving around right here, that's fine as well. If we are respecting this, then understand tomorrow we can potentially look for longs over here, premature longs, as long as this 1 hour gap is still being respected. If it's not being respected, then most likely it's gonna be higher probability to wait for the market to go here, or higher probability to wait for a distribution that takes us lower. Either way, if we're gonna long, we need to respect this area, and shorts, we have to take out this liquidity or be trading within this psychological level, which is 28,000. Okay. So that is like my overall bias for right now on NQ. Very simple. We're not going to force anything. We're going to wait for the market to show us the actual movements that we want to see. Okay. So ES is going to be along the same thing. Now you can see on ES, we have London lows being taken out already, where it has not been taken out here. So we already have a major divergence, and I'm glad I went to ES to actually see that. We already have a major divergence here. So ES is already going to be near that daily gap. That's something that we want to pay attention to, because we could use that as a heavy divergence for us to actually look for longs prematurely. So ES being down here is actually supporting potential longs just off of this 1 hour gap. Okay, but that doesn't mean that we can't completely sell off. Okay, just keep that in mind. All right. But I need some more information on this. So we're going to wait until the market actually opens up and we create some price action. So just look out for my bias tomorrow morning once we have some more price action here, because I want to see if we're going to generate more liquidity above here. I want to see if we have London highs or London lows, Asia highs or Asia lows. So I can't really give you guys a correct bias of what I'll do tomorrow until I see those other liquidity points form. Okay, so that's going to be my main analysis here for NQ. Just for now, look out for the daily bias tomorrow. All right, so let's move right into DXY and some of the pairs. Let's talk about what's going on. So as you guys can see, we're still maintaining this big accumulation right here. We know that we have our low to our high, right? We invalidated this internal structure. We got to change a character. We're pushing down, and guys can see what do we have now? Inside of this larger leg, we have a smaller leg, right? So we have a change of order flow right here. The market has pushed lower. We have traded back into this gap, and now we are pushing lower again, right? Remember I told you guys that most likely we will come into this gap. We see that we have traded into this gap. It's ugly, but we have traded into it. Now, remember what I told you guys, right? This area right here is our spring. This right now is holding majority of the buyers from this large accumulation of price. If we want to see this market go higher right now, what do we need to see? So first, I want to see a manipulation. So we had a premature accumulation, which I told you guys about right here. This premature accumulation that led us into this gap, and now we rejected and we're coming back lower. I want to see a manipulation of this low, and we'll probably form another accumulation. So understand that this accumulation right here can happen right here again, guys. Okay, so what do I mean by that? This could be the start right there, boom, and we could have this one more, boom, another manipulation, and then we actually take off to continue our bullish structure, right? But understand where we're at right now is the highest probability for long opportunities, but we need to actually wait for order flow to shift in our direction. So right now, order flow is still respecting this right here, and we are trading down and we are trading away. As you guys can see, look at the price action, right? Order flow is still bearish. Look how we are moving higher and look how we're coming lower. Okay, so keep that in mind. I don't want you guys to get manipulated. All right, if you're gonna look for longs, I would first look for shorts somewhere here and wait until we take out this low, and I would look for longs underneath this low. All right, so what does that mean in terms of EU and GU? I'm on the wrong thing. Let me, boom. So what does that mean in EU in terms of EU and GU? Well, that means potentially we could have the dollar strengthen, which means EU goes lower. And then a dollar gets weaker, means EU goes higher. And then we have the dollar strengthen again, which means EU goes lower, okay? So whatever happens on DXY is gonna be the opposite on the euro dollar. All right, so that's why it's important that we even look at DXY, okay? It just tracks the strength of the dollar. All right, so now looking at the price action on EU, what do you guys see? It's the opposite. So we have this large manipulation, this push to the downside right here, and look where we're at. We're inside of the 50%. We're at that equilibrium. We started seeing rejections already. Like I told you guys here, what do we have? We have a distribution. That distribution formed this bearish cycle. This bearish cycle got invalidated, so be careful. I would not look for shorts here anymore. Bearish cycle got invalidated. So, boom, boom, boom. Delete all of that. We broke. Change a character right here. Okay. So we have one big leg towards the upside. This looks like a valid demand zone right here. All right, this is the area we're going to look into. So if you're looking for any type of scalping trades, you're looking for any type of intraday trades, for a long opportunity, I would look for here. If the market retraces back higher, honestly, I would wait until we take out this high and then wait for a retracement. I wouldn't try to sell from directly right here unless you get something on the lower time frame or whatever. Honestly, I would wait for us to trade into here and then look to take the market higher. Since we just created this change of character, I wouldn't try to look for any cheeky sells or try to scalp any sells, honestly. I would wait until we get into this demand zone. No limit order here since it's not at the extreme. So do not set limit order here. It's not at the extreme. I would honestly just wait until the market gets in here. Wait for some reactions. Wait for whatever entry model that you want to use. You could wait for a Wyckoff entry model, or you could do this. You could go on the lower time frames. You could wait for the market to create some structure, create a change of character, then take the exact same demand type trade. Like you guys see how this is like a demand zone. You can do the same thing on like the 5-minute time frame inside of this area and look for that type of trade instead towards the upside, right? Or like I said, you could wait for a schematic, an accumulation schematic to form and wait for that break. Either way, you can see that you need some type of change of character or some type of break of structure within this area. Okay, so yeah, that's the main thing that we want to focus for. Now, if this area gets broken, honestly, if this area gets broken, there's only like a couple ways that we could break this area. If you see that we reject from here and we go higher and then we break this area, you can use this automatically as a supply zone to sell the market lower. And what would that mean? That would mean we're actually rejecting away from this area here, this large area that we had marked out, right? And that could potentially set a larger distribution, but we don't want to predict that. Okay, we do have a distribution here. This distribution is already mitigated. We're already going away from it. Now, if the market wants to continue lower, we don't want to try to take sales from here anymore. If you wanted to take sales, up here was your best opportunity. So now we need to wait for the market to actually start invalidating demand zones, which that would be this area right here. We already gave a change of character on the lower time frame. So if I go to the 15-minute, slight change of character by breaking this low. Okay. So like I said, be careful here. Wait for this area. Wait to see how the market reacts in that area, and that'll give you an idea of what to do next, especially on EU. I don't want to delete that, but yeah, this is your line in the sand. Because understand, we still have lots of liquidity underneath us, especially being these lows, right? So there is something on the higher time frame that is supporting potential sales as well, but that's why we look at DXY. Understand, if DXY is accumulating here and we are maintaining this area, most likely buyers are being built. So if this is going to go higher, that means EU is going to continue lower. Okay. Now let's get into GU. GU is a little bit different. It's on its own little scale right now. It's doing its own thing. On the higher time frames, we have from this low to this high, major push towards the upside. We can see that we have traded back into the exactly into the 80 that we talked about, right into the 80. I have so many. Let me delete this big box for you guys just to make it a little bit clean. So we have our larger fibs right here. You guys see we traded directly right into the 80%. Boom. That. And then boom, we push higher, right? Directed right into the 80%, we push higher. So now we have this large leg towards the upside. Now, what do we see? Right here, we have a reaccumulation. So we have this distribution, market goes lower, boom, and then we get this push towards the upside. So technically, this area is still supporting buyers. Now, if you want to buy from this area, I have to look into this to see where you could actually buy, because I don't see no real manipulation that I would take for a long. Maybe right here, but this isn't a decisional area. This is like the same thing that we've seen on EU. This is a decisional area. So this is not somewhere you would set a limit order, since it's not the stem of the manipulation. It's really the continuation that led to the break, which is good. That's good. And I'm pretty sure it lines up with around the 50%. Okay, it lines up more with the 70. So it's more in discount, which is also good. So it's underneath the 50 and it's right inside of that pocket. So this area here is going to be your most likely area if you want to look for longs. It's okay to look for longs on GU since we are already showing this major accumulation with this major push towards the upside. Okay, now it's going to be the same thing, guys. Once we get into this area, wait for that entry confirmation, wait for that entry model. Now, what I'd say for GU, you can actually short on GU. I like this move on GU a lot better. See if I can look for a better thing for you guys. It would definitely be this whole area as your supply. See if I can it is. This whole area would definitely be your supply zone. So if the market trades into this area, we're not taking a limit order. No limit order since order flow is bullish still, right? What you can do, or for the market to trade into here, look for a distribution or whatever entry model you want, short us down into this area. If the market comes down, you're not going to look for shorts somewhere into here. You need the market to pull back here and then short, or market come here and then you long, right? If the market comes here and then you long, basically you want to just take partials here or whatever you want to do, because we might get a rejection here and then we might push higher. But honestly, I wouldn't look for shorts here. Again, if we do push lower and then we push back up, I would honestly take advantage of these longs and just partial out or take profits if you need to at that area. All right. And also one last thing about this, since this is a very extended leg, we have a large accumulation and we're only seeing reaccumulations. This is still one leg that is still pushing. Okay. So for example, from that low to this high, it's still one major leg. So what does that mean? That means if the market breaks this low, we're not just going to automatically say, oh, we're bearish. No, the market needs to actually break this low in order for us to consider us being bearish. But if we do break this low, that means we're going to go into a bearish order flow. And most likely we will trade underneath these little lows, and most likely we will be coming for this large imbalance right here. So that's why I expect the market to come next. I'll put that as 1 hour. So yeah, if the market breaks this low, I'm going to expect us to get probably a retracement, and then we're going to trade into this 1 hour. And this is where you're going to look for an opportunity right here. That is going to be the main area. Why? Because this is going to be mitigating all of this accumulation of buyers that were here. So expect some struggle in this area, expect a lot of bounces, expect probably a larger accumulation that takes us back higher. Right? So this is going to be where the buyers have to prove themselves if we want to continue. So if buyers fail right here, they're going to have to prove themselves here. And that's going to be the line in the sand on a higher time frame perspective. That'll give you an idea of what to do or what to look for, what areas, when to buy, when to sell. Okay. So that is a simple analysis here on GU. Let's cover GJ real quick. So GJ, remember I told you guys on GJ here, we have accumulation, reaccumulation, and then we have this major push. Well, look what happens. We come all the way down, we trade into the pocket, and we give this rejection right here. Now, I told you guys I don't really like rejections like this because this is not proving that buyers are getting into this market. So this kind of looks very ugly to me, honestly. The only thing I would actually trade in his is like reaccumulations. So you guys see that we've already came into the pocket and we're trading away from the pocket. So, yeah, I wouldn't force anything here, guys. Honestly, the main thing I would wait for if you're going to trade GJ is wait for us to trade above this liquidity point, look for a distribution. And if we get a reaccumulation like this, after, like let's say we invalidate that distribution, then you could take a potential buy order to continue taking us higher towards up here, right? To where this original sell started from. Because that's the only thing I would actually do, is try to lead the market into where these original sellers came from. But we need to see reaccumulations, because we don't have any proof that buyers are actually accumulating orders here, or this is just a rejection, which it looks like just a rejection, just like the market exhausting itself. It doesn't look like buyers are stepping in, right? Especially after having this large push to the downside. So just be careful here on GJ, and the line in the sand for this is going to be right here. So if this breaks, I don't expect buyers to be in this market, and we're most likely gonna go lower and break this low right here. All right. Moving on to USD JPY. So looks like we talked about this distribution schematic right here on USD JPY. Looks very clean. You guys can see just range, last manipulation, and we get this big push to the downside that closes underneath this low. All right. Now, at the same time, what are we doing, guys? We are trading into the 50%. Okay, from this low to this high creates our leg. That is the 50%. That is equilibrium. Market trades into equilibrium, and now we're rejecting. Same thing is happening here. We have not formed a valid accumulation yet, but I like this better because it looks like we are. So essentially, we have our selling climax. We have our secondary test, right? What we need here is we need the market to trade above this high, potentially give us a distribution, and I would look for another. You could look for a short here if we get a distribution, so we can get another drive towards the downside, and maybe that'll be our spring, or it could just be our STMB. Either one sets, right? But the main thing is you want to look for longs down here. Okay, you want to look for longs down here. You do not want to look for longs up here. It's only one circumstance that you look for longs where we're at right now. And it's exactly what I just told y'all. You're going to go up above these highs. You're going to look for a distribution, wait for that distribution to play out, and then you need the market to invalidate that distribution. Then you can look for longs. Okay. If that's not the case, most likely I would look for shorts above this high, look for the market to go above this high, wait for that same distribution and try to trade off of that distribution to take us lower, where it's more higher probability for us to get those longs. All right. Because this is one major distribution. So what the market most likely will do is we most likely will come back up here to mitigate this large manipulation here. Okay. So that's USD JPY. You want to look for longs at the lows, and you want to look for reaccumulations like this that can lead you into this supply zone. If you don't get those, then you want to look for potential shorts to lead us down here so you can try to take the longs. All right. And last but not least, let's talk about gold. Also, if you guys have any pairs specifically that you want me to cover, there's so many pairs that I could cover. If you have any pairs that you want me to cover specifically, let me know. I'm just covering majority of like the major, like most traded pairs that I know. So just let me know. All right. And we could add some more pairs to this. That goes for you guys on YouTube and inside of the Discord as well. All right. So let's keep that in mind. All right. Now gold. We talked about gold, right? I told you guys I did not like this, right? This does not prove buyers. The same thing we talked about, I think, on GJ. This does not prove buyers, right? This could just be an exhaustion of price, because look at this heavy sell. So once we bounce from this area, and you guys can see it's literally the same areas that we talk about, the 50%, right? 50% equilibrium. Inside of that demand zone. So boom. Since then, we've been doing what? We've been pushing, and we've been creating bullish market cycle, and then oops, we break the bullish market cycle. Well, what do we kind of see right here that's forming, guys? It's a rounded top, which means it's a distribution. Now, this is not the cleanest distribution. I usually like my distributions to be more sideways, like we seen there on USJPY. and not more upwards. Like upwards distributions like this usually see that as trendline liquidity in the market will push. This is exactly what we look for when it comes to looking for longs. So with that being said, if the market does this, right, I'm gonna keep this here. If the market ends up doing this, that is going to be a very, very good bullish sign. Okay, very, 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 very good bullish sign, because that means we have a potential distribution that is getting invalidated. What does that mean? That means we have potential sellers that are getting overran by buyers. Okay, and if that happens, then we're going to expect the market to pull back and continue to long. Okay, this could take weeks to happen. Keep that in mind. But it's just an overview for you guys to understand and have that perspective on what the market is potentially doing. Now, on the lower time frames, we have to be realistic. What do we have? We have a break of this low, which essentially is just a break in order flow. Okay, now zooming in down here, trying to see what you would even try to take out of this. This manipulation right here. The only valid supply zone that I see, guys, is right here. And this is the decisional area. I would definitely not take a limit order from here. And I would definitely wait for some type of lower time frame confirmation. Okay. Has to be some type of lower time frame confirmation inside of this. Because other than that, all we have above us is just sell side liquidity. And that's why I gave you guys that first scenario in the first place. Okay. We're not going to ignore price coming lower, but we have to make sure we understand what price could potentially be setting itself up for on a longer term. So essentially what I would honestly wait for right now, what I would honestly do, I would honestly look for longs. Trying to find a good area for you guys, somewhere where it has imbalance, somewhere where it has pushes. There you go, right here. Essentially, we're already there. So when the market opens, we could wick out this area. If we wick out this area when the market opens, if we just wick through this area, then this is just gone. Forget about it, right? I would honestly just wait until we get into this potential sell area for us to take shorts if you want to short gold, right? But let's just say this area holds. Or let me draw the fibs here. Boom. Let's just say this area holds. What you would do, same thing, guys. You're going to look for longs to take us into this sell area. All right. But as of right now, I'd be careful on gold because I can see that higher time frame potential playing out. But that could take some time. So you could find some intraday moves inside of this that you could potentially take. But I would be careful on gold because where we're at right now, we definitely can just sit in this middle area. Like on a higher time frame, we could push back up, come back lower, push back up, kind of lower, push back up, and then push all the way up. We've seen gold do this before. Okay. We've seen like right here, guys. There it is right here. On a higher time frame, we could see another large movement like this. So that's why I say be careful. And that's why I told you guys I did not like this, because it's not showing a true accumulation of buyers. So we can't be aggressive up here because we don't know if buyers are really into this market right now at this area. Of course, we know people are buying gold because they were buying gold right here, right? We know that. We know people were buying gold all the way down here. But right now from here, we don't know if these are longevity buyers that are actually the hedge funds that are actually longing gold, because we don't have that large accumulation that is showing that. Okay, this could just be an exhaustion of price, and we do not want to trade exhaustion of price thinking that it is actual long-term buyers. That would make us want to be aggressive here, and it would give you a lot of stop losses. Okay, so just be careful. All right, so that is going to be the market analysis for this week. Let me know what suggestions you guys have. If you have any other pairs, equities, stocks, or anything like that that you would like me to cover, let me know down in the comments. Okay, and I'll see you guys in the next one. Peace out.